Yes, people, a very happy to all of you. Yes, we're doing this chapter called as preparation of the financial statement of a company. So last class we worked out illustration 3 from the ICAI module. Now we'll be heading forward to illustration 5. So illustration 1, 2, 4 I've skipped in between because when the right time comes, I'll be discussing those questions. So now the best question to do next is illustration 5. But before that, there's something basic that we have to know. So I've prepared one basic question for all of you to see how do you handle this question. Okay, one second. Better now? Okay, now from the following, prepare an extract of statement of profit and loss. So they've given one trial balance extract, people. So from this, they are asking us to prepare the statement of profit and loss. Okay, they've given capital 5 lakh, cash balance 6 lakh, sale 3 lakh, purchase 2 lakh. You're supposed to only prepare statement of P&L. After that, you have to prepare a revised draft trial balance one more time, and then finally balance sheet. They'll give you one trial balance with this information. After this, you're supposed to prepare the statement of P&L. After statement of P&L, you're supposed to prepare again the trial balance, not the balance sheet. Okay, possible. Okay, now please tell me, out of these 4 items, which are the 2 items or 3 items or 4 items which will go to your statement of P&L? Sir, sale will go to statement of P&L. Where in statement of P&L?
Revenue from
Operation. Purchases. Nothing mentioned means stock and trade. So this goes to your purchase of
stock and trade.
Correct? Please prepare. Statement of P&L. Particulars. Note number. Amount in rupees. So the first item is revenue from operation. How much is revenue from operation? There. See properly. 3 lakh. Okay. So this becomes my total income. Who's murmuring there? Kya miya, kya miya? No wonder. Next. Purchase of stock in trade. How much? 2 lakh. 2 lakh is your total expenses. Assume there is no tax. So profit after tax or profit before tax, whatever you say, is how much? A minus B. If this is A and if this is B, how much is A minus B? 1 lakh rupees. Wonderful. Now we are not preparing the balance sheet directly. We'll prepare after some time. So now you're supposed to prepare a drafted or redrafted trial balance. Redrafted trial balance. So if I prepare a trial balance after this, how does my trial balance look like? You have to tell me. Debit column, credit column. That even 11th standard student knows. You tell something which I'm expecting.
Instead of sale and purchase, we'll keep surplus.
Okay. Suman is saying something online. Suman, can you be loud one more time, please?
So instead of sale and purchase, we'll keep it as surplus 1 lakh so the credit column.
Wonderful, got it. Suman has answered it. Right or wrong, I have not yet decided. But I got some answer from Suman. Okay, others. Cash will be as it is same. Capital will be as it is same balance. Then? Okay. So you're telling that, sir, when we prepare the statement of P&L, we did not impact this capital account. We did not impact the cash account. So we can copy paste this as it is. Correct? So capital is how much? Capital how much? 5 lakh in the credit column, because capital is always credit balance. It goes to credit column. Cash is how much? 6 lakhs. All the assets are debit balance. It goes to debit column. Now please tell me, how did this 3 lakh rupees from the sale account travel to your statement of P&L? How did this go to your statement of P&L? Sir, I just copy pasted the data from here to there. That is how it happens in real life. No, you're supposed to pass the closing entry. Yes, journal entry. Which journal entry? There are multiple types of journal entry. Which journal entry are focusing on? Closing journal entry. Can you please tell me what is the closing journal entry for this?
Sale account debit to statement of profit and loss.
State sales account debit to statement of P&L. Wonderful. And for purchase, it is statement of P&L account debit to purchases. Very good. By that virtue, what happens? The sale account which is opened get closed. All the nominal accounts at the end of the year has to be closed. If you don't close it, if that ledger has got a balance, then what will happen? That will have an opening balance. And that opening balance will get mingled with the subsequent year sale. So next year sale, when I take, what happens? Whatever the sale is there of next year, it will get combined with the opening balance of the sale. Opening balance of sale is nothing but previous year sale. Can we have the nominal accounts of the previous year data? No. Always when we have nominal accounts, when I say sale, purchases, salary, it should be only of that year. So as per accounting rules and regulations, whatever nominal ledger is created, you have to close the ledger by passing a closing entry. And you will transfer it to statement of P&L in case of companies. In case of partnership and sole proprietorship concern, you transfer to trading or P&L account. So all the nominal accounts at the end of the year has to be closed by passing a closing entry. So now what happens? Sale had a credit balance. Sale had a credit balance on the credit side. That is balance brought on. We had sale how much? 3 lakh rupees. Okay. So this ledger had a balance. Now what happened? The moment you pass this entry, sale account debit to statement of P&L, now to statement of P&L appears here, 3 lakh rupees. Now the ledger is automatically closing on both the sides. There is no balancing. That is the beauty of closing entry. Similarly, your purchase ledger had a debit balance. Balance brought on how much? 2 lakh rupees. Now, I don't want this nominal account to have a balance. I don't want this purchase account to have a balance. So we close it by passing a closing entry. What closing entry did you pass? Statement of P&L to purchase. Statement of P&L to purchase. In purchase account, by statement of P&L. By statement of P&L, how much? 2 lakh rupees. Now, both the sides, the amount is same. No need to balance. So like that, all the nominal accounts at the end of the year, will close it by passing a closing journal entry. Any problem? So when I closed it, where did I transfer these amount? I transferred both of these amount to statement of P&L. So which means now the income and expenses which were scattered in different ledger, I brought both of them under common roof, which is this. These both were put in separate ledger. Now by passing the closing entry, both of them came to same ledger. Only when the item of income, only when the item of expenses, all of them put together come under one common roof, we can net them off and get the profit and loss. That is the ultimate purpose of preparing the statement of P&L. Now, after the statement of P&L, if I prepare the trial balance drafted version, now apart from capital and cash, I'll have one more ledger balance called as profit and loss account balance. So statement of P&L as per company law, let it be a statement. For us, accountant, always this is a ledger. For us, it is a ledger. Now, this ledger is having a balance. How much is the balance of this ledger? 1 lakh. So, this is nothing but surplus. So, either you record surplus or statement of P&L or you write retained earning, whatever name, that will appear now in the balance sheet. Which side? Debit column or credit column? Credit column. Because all the profits have credit balances. Imagine. You prepare the trading and P&L account, okay? So you had net profit. Net profit, where does it come? To net profit, 1 lakh rupees. Balancing figure. And brought down is how much? 1 lakh rupees on the credit side. So whichever ledger is got, the balance brought down on whichever side, that becomes the nature of the balance. So in the P&L account, the balance brought down is coming on which side? Credit side. So this is what balance? Credit balance. So which column will it travel? Credit column. Am I loud and clear? So now, you either say surplus or you say P&L account balance, or you say retained earning, whatever name you want, you can give 1 lakh rupees. Which means what? All the income minus expenses put together, everything is summarized under this category called as surplus. Now, when you balance the trial balance, both are perfectly matching. Now, the question is, sir, why are you making us do this? Is it of any use or relevance to the topic that we are discussing? 100% yes. Now, what happens is that you will get a question from this chapter where they will give you this trial balance. Which trial balance? A trial balance which is coming after the preparation of statement of P&L. And you will find this amount in your trial balance. So what does this trial balance means? Is this the profit in the beginning of the year? That is the accumulated profit of the last year, or is it the profit of the current year? It is a profit of the current year. One coming. How do you? Now the question is asking, sir, how do we know this is current year end balance or beginning balance? If it is beginning balance, if it is surplus at the beginning of the year, then all the surplus, all the item of your revenue items, that is sale purchases, will reflect in your trial balance. If sale purchase, everything is reflecting in trial balance, which means closing entry not passed. Closing entry not passed means statement of P&L not prepared. If statement of P&L is not prepared, the closing balance of the statement of P&L cannot be given. Am I clear? So if you get this trial balance, and in this trial balance, let's say you have a surplus or P&L balance. So this is the opening balance of the surplus. How? Because the current year sale account, purchase account is not closed, P&L not prepared. So closing balance not possible to be derived. On the other hand, if the examiner gives you this trial balance, where you have only the balance sheet items, asset, liability, capital, and there is no revenue items, that is what, no item of income, expense, gain, losses, but you have this profit and loss balance, it means that the question is already prepared, the statement of P&L, and then they have given you this trial balance. So now the surplus or profit and loss or the retained earning, which is reflecting in your trial balance, is nothing but your current year surplus, which you will add it with the reserves and surplus in your balance sheet. Yes, Purvi.
And after that, we have calculated the profit and loss of current year and add with the previous.
No, you have a question based on this. You have to wait for that. Is this point understood? Is this point understood? Are you able to differentiate between the two trial balances? One trial balances which has got all the item of income, expenses, gain and losses. And there's one trial balance where there's no item of income, expenses, gain, losses, whereas we have the net result in the trial balance. If this is understood, then I'll go forward. Please tell me if this is understood or not understood. Online people, is this understood or not understood?
Understood, sir.
Now, based on this is this question, illustration number 5. It says that from the following particulars furnished by Pioneer Limited, prepare the balance sheet as at 31st March 2001 as required by Schedule 3 of the Companies Act. Give notes as the foot of the balance sheet as may be found necessary. Wonderful. Now they have given debit column, credit column, equity capital people, face value is 100 and the capital is 10 lakh. Can you please tell me what is the number of equity shares? Sir, 10 lakh divided by 100, how much is it? 10,000 equity shares. Any problem? No problem. Okay. Next is calls in arrear. Calls in arrear means what? Calls in arrear means what? We have made the call. First call, second call, allotment money call, all the call is made, but the person did not pay the money. This is the money I'm yet to receive. When will I receive? In future. Anything that I receive in future is asset. Asset have what balance? Debit balance. So debit column. But though this is debit balance, though this is asset nature, can I show it on the asset side of balance sheet? No. It is a part of the capital family. And hence, what are we supposed to do? Subtract with the share capital. So typically, calls in arrear is a debit balance. It should come on the asset side. But on the asset side does not make sense. It does not make sense. So what do? We regroup it. So anything from asset side, when it goes to liability side, plus item becomes minus. Plus item becomes minus. Any problem? Hence, we minus it from your share capital. Now, if you don't minus this from share capital, then your share capital will not be at the paid up value. It will be at the called up value. Correct? For example, 10 lakh rupees is what? Total called up value. Correct? No? Hello? Every time you make the call, what is the entry? Equity share allotment to equity share capital. Equity share first called equity share capital. Equity share second and final called equity share capital. Whether the money comes or not, you kept on crediting the capital account. So this capital account is the total called up capital. Every time you made a call, you passed a due entry. What is a due entry? Allotment to equity share capital. First called equity share capital. Second and final called equity share capital. All these were what? Due entries. So this 10 lakh rupees, can I say it is called up capital? Can I show called up capital on the face of the balance sheet? No. Always the paid up capital goes to balance sheet. Remember in 11th standard, X introduced 1 lakh rupees as capital. Means what? We recorded the capital only when we received the money. So whatever capital traveled in your sole proprietorship balance sheet, partnership balance sheet, all it was paid up capital. So same way here also it should be paid up capital. So from the called up capital, we minus 1,000 rupees of calls in arrear. Balance what you get? 9,99,000 rupees is your paid up capital. Logically, are we clear or not? Logic is very, very important in my class. By hearting, anybody can do. Now, we have something called as land, building, plant, machine, etc. I'm not interested in going through all this. Let me come and see what are the additional information. So yesterday's question, illustration 3. We have only one adjustment. What is that adjustment for? Closing stock. Now, how many adjustments do you have? Oh my God, from 1 till to 6. 6 adjustments. Welcome to CA Inter. Now, sir, what? Welcome to CA Inter, sir. In foundation, when we did final accounts, 15 adjustments we did. Correct? No? என்னம்மா முடிச்சிட்டு இருக்க? அம்மா இருக்கு. அதுக்கெல்லாம் போய் கவுண்ட் பண்ண வேண்டாம். அதுல வந்து ஒரு எக்ஸ்ட்ரா சமையல போட்டு போயிடலாம். The following additional information is also provided. 2,000 quantities of equity shares were issued for consideration other than cash. What is this? Chumma they're given, no? No cash or non-cash? No cash means bonus issue. Means I issued the share, I did not get anything in return. Nothing I got in return. So no cash consideration, no consideration. Here they're telling consideration is there, but this other than cash means I have got something else. Asset, service, something I got. So this is information for disclosure. How many years disclosure required? Only 1 year.
1 year.
This is a disclosure requirement. Wonderful. Where does it go to your notes to accounts? Share capital. Now, trade receivable 52,000 are due for more than 6 months. So in the trial balance, there's some trade receivable. In that, there's one particular trade receivable which is due for more than 6 months. Means what? Due date is gone. This one due date, and the due date in the 6 months is gone by. Still money not received. So this is information of aging. Okay. So I'll come back here. I will put one star mark here. Okay. Why am I putting star mark? To know that against this there's an adjustment. I'm putting one adjustment against equity share capital for disclosure requirement. I'm putting one star mark against trade receivable because I need to disclose the aging. Purvi, next time, got to be careful. The cost of the asset is given. Building 4 lakh, plant machinery 7 lakh, furniture 62,500. Cost of the asset. Building 4 lakh is given. Here also we saw somewhere building 3,50,000 is given. Building in the trial balance 350. Building outside trial balance 4 lakh rupees. They're playing in and out with us. One is inside, one is outside. Chumma they're given, no?
Without provision.
I have a lot of questions to ask here. Wait now, control. My question to all of you. What method of accounting for depreciation have they followed?
Provision for depreciation.
Okay. Provision for normal method. Provision method. Provision. Those who didn't understand the question, one more time I'm asking you. This entity would have recorded depreciation now. In last class, we understood the two type of depreciation method. The two type of depreciation. One is normal method. Normal method means what? No discussion. Normal method means what? Depreciation account debit to asset account. PFD method means what? Depreciation to provision for depreciation. So I am asking you, this entity has followed which method? Normal method, PFD method. Next. First, PFD. Normal. You tell me. No, inky pinky ponky then. Tell fast. Normal method. PFD. Normal. Inky pinky ponky, man. No problem, you tell. Whatever information I showed you, more than sufficient to decide. There's no need to see anything else. Normal. PFD. Okay, wonderful. Online people, come on. How many of you say normal? Raise your hands. In Zoom, there's an option to raise your hand. Normal, raise your hand. Suman, says normal. That's all. Okay, Suman, put your hand down. Those who say PFD method, raise your hands. Hey, online, man. Nee solte evlo adi sollen. Dharani Mohan, Harini SN, Jivika, Reshma, Srinidhi, Sudarshini. Jivika, Srinidhi says PFD method. Reshma, PFD method. Okay, others sleeping, huh? All the sleeping beauties and beautas of the online classes, please wake up. Okay. All those who said normal method, I have a question for all of you. How did you know this is normal method? Yes, wonderful. This is absolutely normal method because had it been a PFD method, I always told you in PFD method, whenever you open the asset ledger, opening balance of the asset, closing balance of the asset is always at cost. Correct? No? Whenever you create asset account, let's say building account, you purchased this building 4 years ago. So balance brought on 4 lakh. Here the closing balance also will be 4 lakh. Why? Because in the PFD method, what do? You record the depreciation in the PFD account. So depreciation is not recorded here. Hence, the opening and closing balance is always at cost in PFD method. But here, your cost is 4 lakh, but the balance of the building ledger is how much? 350. So how the hell did the value of the building drop from 4 lakh to 350? Because the depreciation is charged. If depreciation is charged in the asset account, what method is this? Normal method. So how much important is your basic classes? Very, 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 very important. From CA Foundation, I'm screaming and telling. There are certain chapters which will have carry forward impact in your CA Inter, Articleship, CA Final. Oh, till CA final only, sir. After I become CA, it is not of any use. 100% till you die, it is useful. Now, sure. Sir, understood, sir. What you said, understood. Now, what am I supposed to do with this information? They're asking to prepare the balance sheet, not statement of P&L. They asked me to prepare the balance sheet. So, what am I supposed to do? Sir, you're supposed to show the disclosure requirement. Asset list, gross block, depreciation, net block. For presentation purpose, this information is relevant. Otherwise, this information is directly traveling to your balance sheet. This will travel to your balance sheet. But as a CA, we are also looking after the disclosure, presentation requirement. So this is required for the presentation purpose. Okay, understood. Gotcha. So against building, land, building, plant machinery, furniture, I'm putting a star mark because I have to show a disclosure requirement. Okay, sir, got it. Hey, land, we'll put it in the list. No. Third, 3 points over. Okay, shoot. Purvi. Next, shift. Shift. No. Last warning already gave, ma. Now this is the time for punishment. Shift. I will make you sit here only. The balance of 150. The balance of 150,000 in the loan account with State Finance Corporation is inclusive of 7,500. Interest accrued but not due. The loan is secured by way of hypothecation of the plant and machinery. So guys, there's something called as State Finance Corporation in the trial balance. Please check if it is there. Yes, sir. Loan from State Finance Corporation. There is one adjustment. I would love to read the adjustment right now. One more time. It says that the balance of 1,50,000 in the loan account with State Finance Corporation. How much is the balance? 1,50,000 is the balance. In this 150, what is included? There is one 7,500 ka interest included. What interest is that? Interest accrued but not due. Interest accrued but not due. But not due means what? Not due for payment. Okay. So is this 7,500 supposed to go along with your borrowing? No. What are we supposed to do with this? Take it to your other current liability. Which means, sir, this 1,50,000 rupees I have to break down into two parts. One is 7,500. One is balance. How much is balance?
1,42,500.
1,42,500. 1,42,500 is loan from State Financial Corporation. Means borrowing. Long-term borrowing, short-term borrowing, not mentioned. In the absence of information, always it is long-term. No. Short-term is only in relation to your related parties, directors. Whenever you take any loan from bank, financial institutions. You didn't take it for short term. You'll take it for short term and you have to pay next 1 year. You'll take so much pressure. No, no. When I take the loan, I take for long period. I take short term help from whom? For my relatives, friends. If those people who are into the financial corporation, if they don't give me the long term money, or if I have some short term problem of finances, I run to my director, I run to my related parties, please help me. So when I take help from those people, I always take the short term help. But when I go and take the help from the financial institutions, I always take the long term help. So this will be my long term borrowing. Any problem? 7,500 is interest due. Sorry, interest accrued, but not due. When will it be due for payment? If the question is silent, I assume it is due for payment within 12 months of the balance sheet date. You have a doubt? No. Sir, interest accrued but not due. When will it be due? The question is not saying anything. It can be due within 12 months of the balance sheet date, or it can be due beyond the benchmark date also. No. So in the absence of information, the best case assumption is that we will assume that it is due for payment within 12 months of balance sheet date. So this becomes my current liability. Where under current liability? Other current liability. Is this understood or not understood? So I'm taking this into two parts. So the accountant is by mistakenly accounted both under this category in this ledger. So as a CA, you have to apply your knowledge of accounting. At the same time, you have to keep in mind the disclosure requirement, the Schedule 3 requirement of Companies Act. So accordingly, you have to play. Am I loud and clear? In this, do you have any doubts? Online people, do you have any doubts in this?
No, sir.
Now, fifth one, balance at bank includes 2,000 with perfect bank limited, which is not a scheduled bank. Balance at the bank. Do we have any bank balance? Yes, sir. Total 2,47,000 rupees is there. In that, 2,000 rupees is there. 2,000 is with unscheduled bank or non-scheduled bank. Non-scheduled bank. So remaining is how much? 2,45,000 rupees is with scheduled bank. My question goes to all of you. What is the difference between scheduled bank and non-scheduled bank? Wonderful. Where did you study this? Commerce? Economics. Which economics? Foundation or school? Oh, 11, 12. You still remember? Huh? I thought you have Gajani brain. You would have forgotten by now everything. Wonderful. Others? How many of you don't know what is the difference between scheduled bank and non-scheduled bank? Scheduled bank are those banks which are registered under RBI. What is RBI full form? Reserve Bank of India. Godfather of all banks. If any bank is coming under the Godfather, and if these banks do some mischief, what will Godfather do? Load the gun, shoot at sight. Means what? They'll put all the conditions. If they don't follow the conditions properly, those banks have to face serious consequences. So when you have your bank account with a scheduled bank, you feel safe. You feel that your money is safe because there is a godfather to look after that particular bank in which you have the money. What is non-scheduled bank? Non-scheduled bank are those banks which does not come under RBI. They are not registered under Schedule 2 of the RBI. Means if something mischiefs or wrong has been done by those banks, RBI does not have any hold. So Schedule 3 says that in case your company is put any money in non-scheduled bank, you have to make that information known to those 7 people. If too much of money is there in non-scheduled bank, it is a sign of high risk. It is a sign of high risk. And hence it is important to segregate and show how much money is in scheduled bank, how much is in non-scheduled bank. So all your regular banks, HDFC, Axis, SBI, all these banks, what you see the common ones, everybody are scheduled bank, which come under RBI. But if there is anything under non-scheduled bank, you have to be very, very careful. And Schedule 3 tells that please disclose that information separately. Am I loud and clear? Online people, am I loud and clear?
Yes, sir.
Point number 6. We will deal at the end, but I just want to read it. The company had a contract for the erection of the machinery at 150, which is still incomplete. This point, sorry, capital work in progress, wrong. You want to discuss now? Let's discuss now. The company had contract for the erection of machinery at 1,50,000, which is still incomplete. Here, see, there are two things, two type of question can come into your mind. Guys, listen. There could be two types of question coming to your mind. The company had a contract for erection of machinery. First, am I the company who's doing the erection of the machinery? No. Or Am I the person who's given the contract to somebody who was supposed to do erection of machinery? For example, let's say I've taken one air conditioner. Air conditioner is nothing but AC. Let's say I've taken from LG. So is this the balance sheet of LG company which says that I sold the machine, but I've not done the installation? Installation is pending. So this information is given by the LG company, or is it KVA who says that I purchased the AC, but AC installation is not yet done? So is this the balance sheet of KVA Limited or LG Limited? It is KVA Limited. Okay. So now what are they trying to tell? They're trying to tell that KVA Limited has purchased the AC. It is there. AC is, let's suppose, for 50,000 rupees. I paid the 50,000 also. Now they have to do the installation. For installation, they charge separately 2,000, 5,000 depending on the size of the AC. So they have told me you have to pay, sir, 5,000 rupees or 1,50,000 rupees for installation of the AC. But when the installation is done, that time you pay. Okay. So now what happens? Up to 31st March, I purchased the AC. But installation is not done up to 31st March. Installation is not done up to 31st March. What is the installation value? 1,50,000 rupees. Now please tell me, what am I supposed to do with this? The company had a contract for the erection of the machinery. Means I gave the contract to the company to erect the machinery. Erection means what? Installation. Which is still incomplete. They have not started the erection work. They gave the AC and they went. They delivered the machinery and went. But the erection work is not over. Purchase is over. Erection, installation is not over. Why the hell it is loans and advances, man? I've not paid the money also. Boss, the company had a contract for erection of machine at 150, which is still incomplete. Nowhere the question said we paid this 150. If it is paid 150, the entry would have been passed and the entry should have come in your trial balance. If not, the question should say you, the amount is paid, then you will pass the entry. First of all, is this a liability or provision or nothing? One by one will come. If you say liability, I will tell you or I will ask you why it is a liability. Because for liability, for it to be a liability, there are three conditions to be satisfied. One, there should be a possible application. Second, there should be an outflow of economic resources. Third, the amount what you are paying, it should be 100% calculatable. Means the 100% amount should be known to you. Third condition, amount is known to me. If the erection is done, there is going to be an outflow. But is this a possible obligation? Is this an obligation for me to pay this 1.5 lakh rupees? Sir, 50,000 AC you purchased, 5 lakh AC you purchased, you paid the money. Installation, if that person does, then only you have the obligation to pay the money. When the person is not done the installation, when he's not done the erection, how am I liable to make this payment? When I say possible obligation means what? There's a liability that is triggered. For example, I said you my same thing. If my son goes to Ilgris or any departmental store, he picks up the chocolate, he tears the wrapper. There's a possible obligation. That is an obligation. Possible means what? Confirm obligation. There's a confirm obligation. I have to pay. He's not eating it. He just broke the wrapper. He just tore the wrapper. He didn't eat it. I have to pay the money. So this is not a liability because there is no obligation. Second, this is not your provision also, because obligation point. What are the conditions for provision? There are three conditions for provision. One, there should be a possible obligation. Second, it should be outflow of money should be there possibly. And third, if the amount is not accurately known, you should use some reasonable estimate to calculate it. I know the exact amount how much it is, boss. So third condition, second condition satisfied. First condition still not satisfied. Possible obligation is not there. So this is neither provision nor your liability. So what is this? You can say this contingent liability. Why? Because I will pay this 1,50,000 rupees in future if the erection is done, otherwise not. So is this my, a BFT which I am supposed to record in the books of accounts? Am I supposed to record this entry in books of accounts? Is there any transaction here? There's no transaction here. Hence, this will be a pure disclosure requirement. If the person has done the erection and gone, if I have not paid the money, then there's an obligation to pay the money. Amount also known. Outflow also is possible. So it is pakka liability. But here erection is not done. Erection work is not over. So obligation is not there. So transaction is not triggered. Transaction not triggered. Hence, this is a pure item of disclosure. You can give it as a contingent liability. If the erection work is done, then this 1.5 lakh will be paid. You can give us a disclosure. Am I loud and clear? What is the answer saying? Let's have a look at that also. Estimated amount of contract remaining to be executed on the capital account means the capital asset that you purchased. On that account, the contract of erection is still pending, and we are not providing for it because there is no possible obligation. There is no obligation. It has been assumed that the company had given this contract for the purchase of machinery. So they gave the contract for the purchase of machinery. Machinery is purchased, but the erection work is not done. Installation work has not been done. Am I loud and clear? Online people, am I loud and clear?
Yes, sir.
Online people, offline people, am I loud and clear?
Yes, sir.
Wonderful.
Yes, sir.
Can we come back and see your trial balance? Now, can we do the classification fatafat? Equity share capital will go where? Share capital under shareholders funds. Wonderful. Call scenario. Less from share capital. Land, PPE. Very good. Building, PPE. Plant and machinery, PPE. Furniture, very good. General reserve. Okay. Loan from State Financial Corporation. One will go to other current liability. Second is long-term borrowing. Inventory is there. Finished goods and raw material. Change in inventory. Change in inventory. Donkey fellow. Balance sheet they are asking. And if you look at it, here what happened? P&L is given in the trial balance. Means, which trial balance is this? Which trial balance is this? Is this the trial balance after preparing the P&L account, or is this the trial balance before preparing the P&L account?
After preparing P&L.
Yes. I'm coming. I've read the question before, no, so I know it. Now, this finished goods will go to your where? Inventory in your current assets. Okay. Provision for tax always short-term provision. Trade receivable, Advances. Any information on advances given? We have given the advance. Have they told this advance is given to your directors, related parties, or long-term, short-term? Anything is mentioned? No. In the absence of any information, always advances long-term or short-term.
Long-term.
Advances, debit balance. We gave the money. We have to receive this money back in future. Will you take long-term or short-term?
Short-term.
Amount? What depends on the amount? Okay. Pratik sir is giving amount 50 lakh rupees as loan. For me, big amount. Same amount, Ambani gives 50 lakh rupees loan to somebody. For him, small amount. Now you tell amount wise. Then you will say, no sir, amount wise also, party wise also, we have to decide. இப்படி எல்லாம் ஆன்சர் பண்ண எப்ப நம்ம financial statement முடிக்கிறது? Now, see here, you might have different types of, answers. Sometimes I should have treated this as short term, sometimes long term. You can take, I'm telling you, in case of borrowings, advances, nothing mentioned, always you can take long term. Whenever they say it is related to directors, related parties, they say always take it to short term. This is a stance you can take in the exam. So here I'll take it as long-term advances. Long-term advances in textbook, you might find this as short-term. What is it given in textbook? Short-term or long-term? Short-term. So you can take it to long-term also. Had they told advances to related parties, directors, always it is short-term. Borrowing, what they said, nothing mentioned means long-term. So for advance also same rule, no? Nothing mentioned means long-term. But advances at certain places they have treated long-term, certain places short-term. You can go with what textbook is doing, or you can do what I'm saying also. Yes. We can do. See, for justify, I can do anywhere. If you want me to justify why this is short term, I can justify. I'll tell this advance is given to my employee. I gave this assumption. I'm giving this advance to the director. I can take any assumptions. So I'm expecting this money will come back to me in shorter period of time. See, in real life, there'll be no non-clarity about these advances. You'll have the data, no, to whom you gave advance, for what period you gave the advance. So in real life, you'll have the data. Here, what they've done, they've not given the sufficient data. Hence, we are stuck in this particular, situation. Otherwise, in real life, you'll have pakka data. No? You'll ask your accountant, "Yeppa yaar advance kodinga? Yeppo kaasu varum? Benchmark date taandi varuma, munnadi varuma?" So you can ask question. But here, whom will you go and ask question? I say, please tell me, advance will come after benchmark date, before benchmark date. In dream, you will ask ICAI. So I'm telling you, you can justify any manner. If it is short term, if you really want me to justify short term, I can justify short term. If you want me to justify long term, I can justify long term. From 11 till now, I've been justifying everything which is given textbook. You never questioned me. We went with the flow of the textbook. So either ways you can do. Take it long term, short term, doesn't matter. If you want to stick on to what is the answer given in the textbook, short term, we'll take the short term. No problem. Pray to God that this kind of questions does not come in exam. If it is coming, let it be very clear. Because clear question, we know clear answer. Non-clear question, confused answer will be. Dividend payable. Oh my God, what is this, sir? What is dividend payable? Previous year dividend proposed by the board. Current year, in the current year, this year, which financial year we are into? We are into financial year 2000 to 2001. During this year, the AGM is conducted and we have approved the dividend of the previous year. The dividend of previous year. Which year? Previous year means which year? I forgot that year. How should say? 1999. Sorry. 1999 to 2000. Continuous 2001, 2, 2, 3, 3. So 1999 I was born what 1991. Amma. What man? I am only 23 years old. Now come. So, should not talk all this. Previous year, for this year, the dividend has been proposed. I'll be discussing about the dividend concept in the next class. Now just take it from me lightly. In this year, there's a dividend that has been proposed. That dividend is proposed by whom? Don't say boy proposed to girl. Are Baba, we're talking in the context of company. In company, who's boy and who's girl? Board of directors are boy. Shareholders are girl. Okay. So board of directors propose the, your case ulta it is. Okay, leave it. Now, okay, come back. So, for this year, the dividend has been proposed by the board of directors, which will be approved in the current year by shareholders. When in current it is approved, somewhere in middle of the year, July, August, September, in that period, July, August, September 2000, the dividend has been approved by the shareholder. The moment the dividend is approved by the shareholder, you have to pass for entry in the current year. We have to pass for entry in the current year. What is that? Statement of P&L account debit to dividend payable. When I give dividend is nothing but distribution of profit. When I give profit from my total profit, if I give a small portion of profit to you, my profit will increase or decrease? Decrease. Profit is what balance? Credit balance or debit balance? Credit balance. To increase profit, credit. To decrease profit, debit. To decrease profit, I give a debit in the P&L account. Did I pay this money? When am I creating this entry? Next day of AGM. AGM will happen from morning 9 o'clock, 10 o'clock up to 6 o'clock in the evening. Accountant will not wait and pass the entry. He will say, my time over, I am going home. He'll go home. Next day morning, he will come and pass the entry. He will pass an entry. What entry will he pass? Statement of P&L to dividend payable. Means what? The dividend is yet to be paid. When the dividend is paid, as and when the dividend is paid, what will be the entry? Dividend payable to bank. Now, I'm coming. Now, you will see in some cases, they will pass this entry directly. But in some cases, you will see that they will not record the entry directly in the P&L. They'll create one account called as equity dividend. Like how you create an expenditure item, no? Equity dividend account debit to dividend payable. Then this equity dividend is transferred to your statement of P&L by passing a closing entry. What is my closing entry? Statement of P&L account debit to equity dividend. So what happens? This dividend in debit and this dividend in credit, if it cancels, what am I left with? Statement of P&L account in debit to dividend payable, which is nothing but this entry. So these two are the individual entry and this is the combined entry. If you don't understand this, I'm not bothered. Why? Because I'm yet to discuss this in depth. If I touch this concept, it'll take easily 1 hour, at least 40 minutes minimum. So this is not the right time to discuss. I'm just discussing this concept. Who knows this concept very well? Those who have done 11th, 12th and foundation with me in depth. You know this concept, what I'm talking about. Others, do not panic. Keep on hold. When the right time comes, I'll explain this properly. Probably in the next class itself. That time I'll discuss the entire procedure. How the boy, sorry, not boy. Sorry. How the board of directors proposes, how the AGM will approve it, when the entry will be passed, everything will be discussed in depth. That 40 minutes discussion is pending from my side. So please wait. Do not panic. So as of now, what this dividend is payable, it's a liability. And the moment the dividend is approved by the shareholders in the AGM, within 30 days, we are supposed to make the payment. So can I say this is short-term payment? So will it go to non-current liability or current liability? Current liability. Where in current liability? Other current liability. Am I loud and clear?
Yes, sir.
Online people, am I loud and clear?
Yes.
Sir.
Now, profit and loss account 86,700 is given. Is this the opening profit or closing profit?
Closing profit.
How do you say this is closing profit? Sir, had this been opening profit? No. Along with that, sale, purchase, all the income expenses would have been given. Here is it given? No. Why it is not given? Because you already prepared the statement of P&L and the balance of that ledger is this. So this is my closing statement of P&L, which I will put in reserves and surplus directly. Okay, not okay? Okay, not okay? Okay. Cash and cash balance. Cash and cash equivalent. Cash at bank. Loans unsecured. Nothing mentioned. Long-term borrowing. Trade payable. Trade payable. Now for trade payable, have they given aging information? No. So I can put trade payable directly in the balance sheet. Note number not required. Is the question understood? Can we do it? Fatafat. Guys, I'm telling you, initial at least 8 to 10 questions I'll do with the full format. There are three phases in which I'll do the question. One phase will be I'll be doing the entire question along with you. Next, a phase will come where I'll read the entire question, but in that the important points alone I will present. Third will be that phase of questions where I'll only read the questions. You will take that as homework. Maybe fourth will be one phase where whatever homework I gave questions that you want me to come and discuss, that doubt point alone I will discuss. So I'm segregating all the questions to 4 different categories. But initial 8 to 10 questions to set a momentum, how to write it. So I'll be doing the questions along with you. Because if I do all the questions in the class, each question will take approximately 1 hour. So 40 hours we'll spend only on doing the 40 questions. Am I clear? So we don't have that much of time. So we'll do at least 8 to 10 questions in the class with the proper formatting. Let's do. They've asked the balance sheet people. So what will be heading? First, the name of the company. Yes. What is the name of the company? Okay. Spelling of Pioneer? Wonderful. Next. Balance sheet as on or as at 31st March 2000. 1, nah? Okay. Particulars. Note number. (31st March 2001). An amount is in rupees. Amount in rupees in the top right corner. Okay, what is the main heading?
Equity and liability.
Under that, the first one. Online people requesting you to please open your mouth and respond. Shareholders funds. Under that, share capital. Do I need to give a note number? Yes, note number 1. B is what? Reserves and surplus. Any note is required? Note number 2. Do I need to give C money received against share warrant? No information means we can skip it, no problem. Share application pending allotment, should I give it? Not there means leave it. That next is what? Non current liability. Is it liability or liabilities? Under that, what is A? Very good. Long-term borrowings. Note number is required? Yes, we have a bifurcation. B is what? Deferred tax liability net. Do we need to give it here? Not required. Next is what? Other Long-term liabilities. Do we have any other long-term liabilities? Recollect, whatever we record in trial balance, do we have any other long-term liabilities? No. Long-term provision? Long-term provision. We have short-term provision. Long-term provision is not there. Online people, do you agree with me?
Yes, sir.
Third one is what? Third category. Current liabilities. Under the first one is short-term borrowing. Do we have any short-term borrowing? Very short-term borrowing. Advance is asset. Very short-term borrowing. Short-term borrowing is there? Not there, no. Are check and tell me fast. That's what I'm doing. Okay, after short-term borrowing, next. Trade payable. Okay. Trade payable, any note number is required? Not required. Directly we can record it. How much?
2 lakhs.
Trade payable 2 lakh, recorded directly in the outer column. Okay. After that, B. Come in order. Short-term borrowing, trade payable, other current liability, short-term provision. Do we have other current liabilities? Yes. Other current liabilities. C is what? Short-term provision. The short-term provision, if only one item is there, you can directly record in your this thing. Or else if you want, if you have time, then you can create the note separately. Otherwise, you can do it directly. Depending on time, you can decide. But in textbook, everywhere for short-term provision, they have created the note. So other current liability, note number 4, short-term provision, note number 5. Correct? With this, are we done with the liability side? Okay. Can we finish these notes first? Chalo, let's do note number 1. Share capital. Okay, what is the information here? Authorized capital. Do it fast. Description, please. In the absence of information authorized share capital, we'll assume that whatever is issued is authorized. So how much? 10,000 equity shares of rupees 100 each. How much it is? 10 lakhs. Put the double line in between. Second is what? Issued, subscribed, and paid up capital. How much is called up? On 10,000 equity shares, full 100 rupees has been called up. So 10,000 equity shares of rupees 100 each. How much it is? 10 lakh. This is called up capital, which is given in the trial balance. From that, less calls in arrear. Calls in arrear. How much it is? 1,000. How much it becomes? 9,99,000. This is what will travel to the face of balance sheet. But there's one important thing that has to be disclosed. Yes. 2,000 equity shares were issued for consideration other than cash. Just copy paste like that. Look here. Out of the above, 2,000 shares has been issued for consideration other than cash. Like this, you have to give in the bracket. Yes. Now here they're asking, should I write it here or after calls in arrear? Both are allowed. You can stick on to this, nothing wrong in it. Other than cash. Without forgetting, write this 9,99,000 in the face of the balance sheet. Can we go to next one? Note number 2. Sorry, come again. Not required. Amount not required. Just a disclosure that out of the above, 2000 shares are issued for consideration other than the cash, because amount part is already included in this. No, in the 10,000 the 2000 shares. So separate amount is not required to be disclosed. Just this information description is more than sufficient. Next is what note number 2 for reserves and surplus. Do we have any reserves? General reserve is there? Okay. Now, note 2, reserves and surplus. So general reserve, directly in the outer column, we can write it. How much it is? Two lakh 10,000 in the outer column. Then you have profit and loss. Another name for this profit and loss account is surplus. Another name of surplus is retained earning. Any name they can give. So right, profit and loss account. How much it is? 86,700. Total is 2,96,700 is it? So profit is 86,700. Sorry. Wonderful. Next is what? Long-term borrowing. Long-term borrowing. Now, loan from State Finance Corporation 1,50,000. Please write in the inner column. Loan from State Finance Corporation 1,50,000 in the inner column. Less interest accrued but not due, and above that was one more point given, that this is secured by way of hypothecation against the plant and machinery. So two things you have to do. One, segregate and transfer that 7,500 to other current liability, and below that you have to give the disclosure. Less interest accrued but not due 7,500. If a minus balance is 1,42,500. Below in bracket you have to write, this loan has been secured by way of hypothecation against the plant and machinery. Secured by hypothecation of plant and machinery. Now, once you write this disclosure, take a highlighter, highlight it. Because next time, whenever you read it, see, presentation part, writing part, value part, you'll take care of. The only one place where you can make mistake is not giving this disclosures. So highlight it, you'll remember it. Done. Record 1,42,500 in the outer column. That is face of the balance sheet. Is there any unsecured loans? Oh shit, sorry, it's there. My mistake. Then write this as 1. 1 is, these are secured loans. Then we have 2 number, unsecured loan. Since there is no breakup of the unsecured loan, you can write in the outer column the amount against this unsecured loan word. $1,21,000. Had they told you the breakup of the unsecured loan, the loan is coming from so and so person, then below that you have to give in the description. But nothing mentioned means, right, unsecured loan is equal to 1,21,000. So what is the total? 2,63,500. Please take it in the outer column of the main balance sheet. 2,63,500. Next is for other current liabilities. This entire chapter, I'm telling you, 90% is easy. 10% here and there, you need to remember how a tricky question needs to be handled. Once you become a pro in this chapter, no, the only point that will bother is those 10% question, which is here and there highly tricky. Rest by practice, you'll become a pro in it. I'm not telling there's a problem in it, but the main thing will come in that 10% where the complications will be there. Those type of questions we have not still encountered. They're yet to come. Now, under other current liability are so many things. Interest accrued but not due for payment. Interest accrued and due for payment. Then dividend payable is there. Then unpaid mature debentures, unpaid mature deposits. That share application money which you have to refund. So all this will come under other current liability. So now first item is what? Interest accrued but not due. How much? 7,500. 7,500. Then is dividend payable. Am I right? 60,000 rupees dividend payable. Anything else? Anything else? That's all. 67,500. Short-term provision for tax. How much it is? 68,000. You can just create a bifurcation like this. Short-term provision, under that provision for tax. Note number 5. So what is my total equity and liabilities? Eighteen lakh 94,700. Okay. Online people, are you all getting this answer? Online people, are you all getting this answer?
Yes, sir.
Anybody's got doubts in the equity and liability parts? Online people? Any difficulty in understanding these notes?
No, sir.
Sir. No, sir.
Others, please open your mouth and respond, please. What happens, Viksha? It's neat, huh? Thank you so much. See, the problem of handwriting, no, others I'm telling, those are laughing at what you said. If at all you find this not neat, the problem is not in my handwriting, the problem is with this pen. Problem with the? I'm not so unfair also with people. I know. When you said that no, it's neat, other people sarcastically laughed at it. So I'm giving answer to those people, not you. Now, one is now it is if it's neat, I want to finalize in zoom out, both are neat. Thank you. Only Subiksha appreciates my hard work. That is why I told you the problem with the technology pen, not with the sir. Only person who can compete well with handwriting is this gentleman sitting in front of me. You've seen his handwriting? Hari's handwriting? Never. Sure. I don't know online people I can show it or not. Offline you can see. Artha Janmona Nandichina. If God asks handwriting on Grala Venumana, Handi Harimar and Gipanan. Up the printed smart handwriting. Wait, no. I don't know online how many of you can read this. Online very difficult. It is getting mirrored. He will let test. No, I'll send his test papers. You see? Appadi print out now. He's blessed with the good handwriting. Hard work. As if we are not doing hard work. Now, next part is what? Assets. Short term provision நான் சொன்னல டெக்ஸ்ட் புக்ல காப்பி பேஸ்ட் பண்ணிடுங்க. Hey, short term provision, please create a note. I didn't do it, please do it. Please create this directly in your notes to accounts, note number 5. Okay, the first one under this is very good, non current assets. Under the A is property, plant, equipment and intangible asset. Under that it is PPE, intangible asset, then capital work in progress, and then intangible asset under development. Siddharth is in full form today. இனி எவன் வந்தாலும் முடிச்சிடுறேன்றான். சரி, okay. We have PPE. Okay, do we have intangibles? Any capital work in progress, IT under development? No. So what is the note number 6? We'll put it here. Note 6. Listen. Don't do anything. Just listen. Property, plant, equipment. Listen. Don't do anything. Shh. Just I'll give you time. Please wait. Particulars. See, I gave you one format yesterday. I taught you one format yesterday. For cost itself, we have 4 columns. Opening balance, addition column, deletion column, closing balance column. For depreciation, again 4 columns. Opening balance of depreciation, current depreciation, reversal of depreciation, closing balance of depreciation. And then finally net block. What are you blinking, man? He's reacting as if I'm telling something new in today's class. So 2 things would have happened. Either you were physically present yesterday but mentally absent, or you are Gajni, such a Gajni, without revision you forgot everything. सब दोनों में से क्या हुआ बताओ? Now here what you're supposed to do from examination perspective, I'll tell you. Here there is no addition, no deletion. So multiple column not required. Only one single column you'll record for gross block. Then accumulated depreciation. I'm coming. Wait, that's why I told you. Observe, wait. Shh. Purume. Net block. Net block means what? WDV. Gross block means what? Cost. Listen, don't do anything. Please wait. Gross block means always at cost. This is accumulated depreciation. This is WDV. What is the meaning of WDV? Which is coming after, I know. What is GST? Na, goods and service tax. As if the person who is teaching GST does not know GST stands for goods and service tax. I'm coming. Pop. Wait, I'm coming. I'm not going anywhere. Without you asking how much I'm explaining. And this thing I'll not explain. Land, 2 lakh rupees. Okay. Now the information which is given in the trial balance is the net block. Okay. Listen. Don't do anything. Just listen. Don't do anything. 2 lakh in the net block. Land is an appreciable asset. Depreciation not possible except those scenarios which we discussed in the CA foundation. So gross block is always 2 lakh. Illapa. Land bomb blast pantana. Then what item? Wonderful. Creative imagination. If the land where this particular company is having is marked under, tsunami attack, or what is that? Terrorist attack. This is the problem when you guys watch too much of movies. Volcanic eruption. Sorry, okay. Let's take that also. What I meant was earthquake prone zone. Then you let's say this company is purchased a land. Then later they declare that the area is subject to earthquake. Then the value of the land will come down. That time you will do depreciation. Imagine. All of you imagine. Now come back. Look. If that is leasehold land only, this is not. See, land here means always freehold land. Leasehold, na, then what he said is right. Yes. Building. Purvi, why are you laughing like this? Now, building 350. My question goes to all of you. Will you put this in gross block or net block? Net block. Yes, 350. What is a gross block? Given in the question, people. In the question, the adjustment is 4 lakh rupees. Building 4 lakh rupees. Now, what is your accumulated depreciation? 50,000 rupees is your accumulated depreciation. This is your balancing figure. Any problem? BF stands for balancing figure. Now, I know what you guys will think. You will think breakfast. You will think breakfast. Footy people will think breakfast. Other criminal-minded people will think something else. I don't know about you guys. Footy person thinks about only eating. Now, next is what? Plant and machinery. How much? 5 lakh 25,000. Plant and machinery. How much? 5 lakh 25,000 the net block. Furniture 50,000 the net block.
So 7 lakh is gross.
Hey, first net mudichilanda. How many times up and down I'll do? For hard work limit kadiyada. Smart work. That's what I said in last class. Hard work is important. Equally, what is important? Smart work. Plant and machinery. Gross is how much? 7 lakh. So what is the accumulated depreciation? 1,75,000. Balancing figure. Okay. Next, furniture gross block is how much? 62,500. How much is the balancing figure? 12,500 is accumulated depreciation. This is just a disclosure requirement. Now, which of these total will travel to your face of balance sheet? Always net block. Tell me the total. $11 lakh 25,000. Okay. Now, please come back. What is the next item? Non-current asset. Sorry, non-current investment. Is it there? You want to see the note? What is the next item after non-current investment? Next. Deferred tax asset net. Okay, that is also not there. Next. Long-term loans advance also not there. Leave it. Next. Other non-current assets. There? Not there. A question you don't have a PDF I've sent already. Such a lazy goose is, man. Big screen. For that you should have big brains also. Now tell me, this is the question. Tell me, non-current asset over? Nothing is there? Okay. So directly now current assets? That's what you told to take it short term, no? Equal to textbook. Current asset. Current asset. Advances is given. If you want to take the long term, you can take it long term. But what we decided, we'll go with the textbook. Okay, what is the first item?
Current investment.
You have to go in the same order. You cannot change. Current investment. Do we have current investment here? No. Leave it. Next.
Inventory.
Inventory is the second item. Check with the balance sheet format.
Yes, sir.
Second item is inventory. Okay. Inventory or inventories? Are you telling out of your own brain or from the format? Are you sure? Sappa. Inventories. Note number 7. You have to give the breakup. Breakup means not what you're thinking. No, some people will have some experience, no. So when the word that is used, they'll go to their own state of imagination. He's touching on my nerves. Finished goods.
2 lakhs.
பாத்துரா என் வைஃப் எங்க வந்தானா அவ்வளவுதான் அப்புறம். Finished goods 2 lakh rupees. Next is what? Raw material. Can we write raw material finished goods together? No, I knew you'll make this mistake. Donkey fellow, that bifurcation is the only therefore statement of P&L. When it comes to inventory, you record all the inventory together, no? Raw material inventory, work in progress, finished goods, stock in trade, goods in transit. Remember those 7 points. Then other stores and spares, loose tools and others. So in that 7 we put everything together. Donkey fellas, I know you'll make mistakes. Second is what? Raw materials. 50,000. Total how much? 2,50,000. Okay. Next, trade payables. The end of the trade receivables next. Okay. Note number 8. No directly because aging is required. They have given the aging. No. You are Gajani fellow only. Trade receivable 52,000 are due for more than 6 months. Now listen. When there are multiple agings, then you can put the tabular column. There's only one aging. You can just give in the description format, like it is given in the textbook. This is allowed, and ICAI itself does it, so you can do it, no problem. Like this. Debts outstanding for period exceeding 6 months means the due date is gone by, and is gone by how much? We have crossed 6 more months after the due date. This 148 is how much? The due date is still not come. It is yet to come. The due date is yet to be touched. So always aging is required only for those debtors which is cross the due date. Note number is what? 8. How much it is? 52,000. So how much is other debts? 1,48,000. Total is how much? 2 lakh rupees. So 2 lakh total debtors is given in your trial balance. In that 52,000 is exceeding 6 months. Remaining is 1,48,000 other debts.
Sir,
yes, boss. Yeah, we can do that. I think wrong. The disclosure needs to be properly understood in your notes to accounts. But if you ask me in real life, you cannot give the disclosure like this in layman language. It has been proper tabular column. Yes. But see what happens. See, in the exam, there's a practical difficulty. We have to complete the question in a stipulated time. So what ICAI has done is at multiple places in the notes to accounts level, they've given some relaxations. So wherever we can take the relaxations, we can take it. So trade receivable is one such relaxation. Where I don't have to draw this entire tabular column. If they give one small information, just a small information, you write it just to know, let know the examiner that you know this concept of disclosure, that this should be given separately and this should be given separately. That's all. Next is what? Very good. Cash and cash equivalent. Note number 9. In that, cash in hand is how much, people? Cash in hand is how much? Cash in hand is 30,000. Okay. Right, like this, what I'm doing. Cash in hand, 30,000. Then 2. Cash at bank. In that scheduled and unscheduled, non-scheduled. What secured and unsecured? Who securing, pa? பாருங்க எல்லாம் வந்துரும். இதுக்குள்ளத வர எல்லாம். Scheduled bank balance. Scheduled bank balance, current account. How much? Total is 2,47,000 rupees. In that, under scheduled it is 245 and non-scheduled is others is 2,000. So 2,45,000. Other bank, you have to mention in the bracket, it is Perfect Bank Limited. 2,000 rupees. So total how much? 2 lakh?
77.
Hey, 77 no man, 47,000. What happened to you, man? You didn't sleep properly today.
Total, sir.
Oh, total. Okay. Then is there anything else? That's all? Total is how much? 2 lakh? 77,000. Okay, tell me something. Fixed deposit from 1 day to 3 months goes where?
Cash and cash equivalent.
Cash and cash equivalent under cash at bank. Point category 2. Fixed deposit more than 3 months but up to 12 months. Again cash and cash equivalent but point number 3. Fixed deposit beyond 12 months, that is more than 12 months, but you'll receive the money back within the benchmark date. Current investment. You have put the fixed deposit more than 12 months and the money will come back to you beyond the benchmark date. Non-current investment. Clarity is there? One more time. You've done, you put fixed deposit in bank. 1 day, 2, you can put FD for 1 day also. So 1 day up to 3 months. So you'll go to your category number 2. Cash at bank here. Okay. 3 months to 12 months. So you'll go to your category number 3. You have put fixed deposit more than 12 months. And that money is going to come to you back after the benchmark date. Then non-current investment. It is going to come to you before the benchmark date. Current investment. Zero to 3 months. Cash and cash equivalent, point number 2. 3 month to 12 month. Cash and cash equivalent, point number 3. Beyond 12 month, but the money is coming back to you within the benchmark date. 1 second. Huh? The money will come to you beyond 12 months, but within benchmark date. Current investment. More than 12 months, but it will come. Money will receive beyond benchmark date. Non-current investment. Any problem? Two lakh 77,000 cash and cash equivalent. Now next is what? Short-term loans advances. Only one item is there. We can directly write it. How much? 42,700. That's all? Oh, easy man. Next. What is the total? 18,94,700. Who tallied? Oh, hello. Whose brain worked 100% capacity? Okay. Teamwork. Okay, teamwork. Agreed. Don't cry. Now you have to give a note of this. It's a separate note. You can give note 8, 9, 10. Note 10 also you can give. Nothing wrong. After balance sheet. That is after you, when you see, you prepare first balance sheet, P&L, then you do notes, no? After all the notes, finally, this note will be given. See here, the language of what they've given, I'm not agreeing with the language. So basically, my point here is that the machinery, see, the question could have been more clear, but with the information what they have given, with the answer what they have given, we have constructed one answer telling that We have received the delivery of the machine, but the erection is pending because the language what they used is erection. Erection means what? Purchase. After purchase, erection happens. So now for purchase, there's a separate value. Erection always separate value. Since the erection is not done, the liability is not triggered. There's no obligation arised. Since there is no obligation arised, there is no need to record the transaction. Since the erection work, okay, we can just since the question is silent about the purchase of, is it machine they have used the word?
Yes, sir.
Since the question is silent about the purchase of machine, we assume that the machine is procured awaiting erection. Awaiting erection. Since a separate amount, what happened? Since the question is silent about the purchase of machine, we assume that the machine is procured awaiting erection. Since a separate amount is provided for erection, since a separate amount is provided for erection, and that the erection work is not commenced, it's not commenced, the obligation to pay the money does not arise, and hence there is no need to create a provision, no need to create either a provision, no need to create either a provision nor a liability, comma, a disclosure in this regard is sufficient. A disclosure in this regard is sufficient. Since a separate amount is provided for erection and that the erection work is not commenced, the obligation to pay the money does not arise. And hence, there is no need to create either a provision nor a liability, and the disclosure in this regard is sufficient. That is what is the book trying to say, but we are trying to elaborate in more better way. In assumption, we have taken slightly more, what you called in deep. Our assumption is slightly more in deep. Yes, sorry. Since a separate amount is provided for erection and that the erection work is not commenced, you talk the first paragraph. Since the question is silent about the purchase of machine, we assume that the machine is procured, comma, awaiting erection or pending erection. Awaiting or pending erection. That means the work is incomplete. No. So work is complete when the procurement is also done, the installation also is done. Both are done, then it is complete. So it is incomplete means what? Procurement is done and erection is pending. Or you can assume that the erection work is started but not completed. It is incomplete. So my liability still arises when the erection is complete. So installation guy came. What he did, he drilled the holes. He just put that plate, but he did not complete the erection process. So I will not pay the money. No, the liability arises when the installation is completed. So the second assumption could be that the installation process has started, but they could not complete it before time. Since the erection is not completed, so the obligation does not arise. And since the obligation is not there, there's no need of provision or liability. A disclosure in this regard is more than sufficient. Can I go forward? What will you do with the break, man? See, what time are we supposed to start the class? 4:30. When did it start? 5 o'clock we started. How much hours of break you took? Half an hour break already you took. So what break you require? You. Now, 6th question pending. Subiksha, what point? See, that is not the matter. What is the matter? Your brain was lying idle. So break is already over.
Sir, in this case, sir,
Ah.
if there is any advance payment is given the trial balance, then the assumption would have been different.
அது காம்ப்ளிகேட் பண்ண வேண்டாம் இப்போதைக்கு. We keep it very simple.
So there is nothing given in trial balance related to that. So we are
correct. Advance would have been given in the trial balance, would have taken it to the long-term loans advances or short-term loans advances, depending on when the erection is going to happen. 7th question, please take your, if you have book, you can take your exercise question. So we have total 6 questions in your illustrations, and we have a couple of questions in the book bag exercise. So this is exercise question, the 7th one. You guys want break? Seriously? What, man? Advances gain means either long term or short term. The machine is going to come within 12 months of balance sheet date, then that advance will be classified as short term. Yes, the question what they are asking now is that in case for this erection work advance is given, then that advance will come in the trial balance. So where will you classify the advance? If that erection is going to happen within 12 months of balance sheet date, short term loans advances. Otherwise, long term. If the erection is going to happen beyond the benchmark date, then long term. Advances separate category we have no. That you have to put, not in other current assets. Sorry? That case, correct. So,
it's giving a point of view of giving a loan.
See, loans and advances does not necessarily means that we are advancing the loan. Loan on asset side means giving loan. Advances means what? Apart from loan, we are advancing the money also. No? So it is both perspective, not just one perspective. Both the perspective put together. So guys, it is 6:50 now. You really want to have a break? Chalo, we'll take a 2 minutes break. No problem. Let's take a 2-minute break. We'll come back and continue. Yes, people. Welcome back to the break. So let's continue. So I'm going to discuss one example which has got absolute relevance to the next concept that I'm discussing. So please concentrate. It says that XYZ Limited issued 10,000 quantities of 10% debenture of 100 each on 1st April 2020. These debentures are to be redeemed at rupees 110 each as on 31st March 25. So when is the debenture issue? In the financial year 2021. So 2021, 21, 22, 22, 23, 24, 25. How many years?
5 years.
4 or 5. 2021, 21, 22, 22, 23, 23, 24, 24, 25. 5 years. 5 years. So these are the debenture for 5 years. What is the issue price per debenture? 100 rupees. What is the redemption price per debenture? 110. Are you paying anything extra? Yes. How much you are paying extra? 10 rupees. What is that? Premium on redemption of debenture. Do you know the premium today when the debenture is issued? Yes. So based on the prudence concept, that loss should I book now or not? Yes. Now, please tell me in the first year, 2021, just tell me, don't do anything, just tell me. In 2021, when the debenture is issued, the entry is going to be bank to debenture application, then debenture application to 10% debenture. How much it is? 10% debenture. So can I combine both and write together? Okay. So bank account debit. How much?
10 lakhs. 10,000 into 100.
10,000 to 100 is how much?
10 lakhs.
10 lakhs. This is the question which Subiksha asked yesterday in You will get your answer today for this question. So 2, 9% debenture, 10 lakhs. This entry you record on the date of issue of debenture, correct? Second, at the end of the year, 31st March 21, there's a loss on issue of debenture. There's a loss on issue of debenture. So what is the loss entry? Loss on issue of debenture, account debit to premium on redemption of debenture. How much? Sir, 10,000 debenture into 10 rupee per debenture extra I'm paying. 10 rupee per debenture extra I'm paying. So overall, how much extra I'm paying? 1 lakh rupees. Now, loss on issue of debenture is nominal account. This will go to statement of P&L. Premium on redemption of debenture is your liability. So this goes to your no. When are you going to repay this? After 5 years, beyond the benchmark date. So this other long-term liabilities, correct?
So you will pass this only on the first year itself. That's what it is.
Yes. So you asked me a question that, sir, on 31st March 21, Sudiksha asked me yesterday, how much of this loss will I transfer to P&L? Will I transfer the entire 1 lakh loss to P&L? No. How much will we transfer? We will apportion over the life of the asset. Sorry, the life of the debenture. So what is the life of the debenture? 5 years. Matching principle says that you are going to enjoy this money for how many years? 5 years. Then this loss also needs to be apportioned over a period of 5 years. So now 1 lakh into 1 by 5, how much it is? 20,000 out of this loss I am transferring to statement of P&L. So what is my transfer entry, closing entry?
Statement of P&L account debit to loss on issue of debenture.
Very good. Statement of P&L account debit to loss on issue of debenture. How much? 20,000, 20,000. Any problem here?
No, sir.
After this, if I ask you to prepare a trial balance, can you prepare a trial balance? Yes. Trial balance, bank will go to debit column. How much is the bank money received? 10 lakh. Because you have passed the double entry system of accounting. Every transaction, 2 impact given. So if you prepare a trial balance, pakka it will tally. So bank is how much? 10 lakhs.
10% debenture.
I'll just put a tick mark here. Then 9% debenture, how much? 10 lakhs. Online people are able to follow? Is it 9% or 10% debenture? It is 10% debenture. Sorry. %10 debenture also 10 lakh. The journal entry, what have we put? 9%?
Yes.
So this should also be 10%. Okay. Then loss on issue of debenture, properly tell me, one debit I've given here means plus. And we have closed this by giving a credit to the extent of 20,000 rupees. Minus. So 1 lakh plus, that is plus 1 lakh minus 20,000. What is the net balance in the loss on issue of debenture account? 80,000. 80,000 balance. Listen to me very carefully. Is it a debit balance or a credit balance? Debit balance. Because your debit side total is more than credit side. So when you open the ledger, you will know this ledger is having a balance brought down on the debit side. So if you open a loss on issue of debenture, so 2 premium will be 1 lakh by P&L 20,000. So what is the closing balance? 80,000. Brought down 80,000. So the opening balance is coming on the debit side. So what balance it is? Debit balance. So now loss on issue of debenture is how much? 80,000 in the debit column. Any difficulty in digesting?
No, sir.
Then coming to premium on redemption of debenture is my liability having credit balance because you have credited the ledger. So if any ledger is only credited, nothing in debit, so that ledger will have what balance? Credit balance. So premium on redemption of debenture. How much? 1 lakh on the credit side. Okay. Then what have you done? You have prepared a statement of P&L by debiting. So which means assume there is no revenue from operation. No other income. No cost of material consumed. No change in inventory. No purchase of stock in trade. No depreciation, amortization. No employee benefit. But only finance cost. Because your loss which you are transferred to statement of P&L, this goes to your finance cost. Only finance cost is there. Not even other expenses. Imagine that kind of P&L. where everything is zero. Only finance cost is that 20,000. So A minus B, 0 minus 20,000. So overall 20,000 loss. Loss is having what balance? Debit or credit balance? Loss is always debit balance. Profit is always credit balance. So if I put statement of P&L in debit column, do you have any problem? Statement of P&L, 20,000 online people, do you have any problem?
No, sir.
Please total and tell me, is the total matching or not matching?
Yes, sir.
11 lakh? 11 lakh. Correct? Now, this bank balance will go where? In the balance sheet. Cash and cash equivalent. Wonderful. Super. Debentures will go to long-term borrowing. Wonderful. Premium or redemption of debenture will go to your premium or redemption of debenture. Other non-current liabilities is called other long-term. Other long-term liabilities. Be very careful. You're getting confused with other non-current liabilities. There's nothing called as other non-current liability. It is other long-term liabilities. Be very careful. Statement of P&L will get what? Whatever is the opening balance of the surplus, no? With the opening balance of surplus, you will minus this. Or no, bhai, this is loss item, no? Profits will be added, loss will be subtracted. Correct? This you have no problem. You will have problem with this one alien called as loss on issue of debenture. So this is having a debit balance. Normally, which type of accounts have debit balance? Assets. So if I prepare a balance sheet in the older format, this used to appear in the case of sole proprietorship concern and partnership concern, loss on issue of debenture. How much? 80,000. Similar item, preliminary expenses or deferred revenue expenditure. So all these are those items which are expenditure in nature, loss in nature. But why are they sitting on the asset side? Because matching principle said that this expenses I cannot record in year one. I have to break up over a period of 5 years or 8 years or 10 years. Hence, until you break them down, take it to the asset side. Like that, there's a matching principle coming into picture. Because of that principle, these three people came and sat on the asset side. Are they technically assets? What is assets? Anything that I own in the business is asset, or anything that I expect to receive in future is asset. Using this, I can earn some income out of it. Directly or indirectly, I can earn some income out of it. Correct? No? If I have land, using land, it helps me in growing my business income. Plant machinery, debtor, whatever you name, man, whatever you name. Any asset which is there on the asset side, which is directly or indirectly helping me to grow in my business. But these are all the item of expenses and losses, which is not helping me to grow in future. Because the expense is already done. The loss is already incurred. But because of this concept of matching principle, we are forced not to record this in the P&L. And because of that concept, it is come and sitting where on the asset side. Just because of the accounting entry concept. Because of the accounting entries and the process what we follow, forcefully, it is coming and sitting on the asset side. When you prepare the financial statement of a sole proprietorship concern and partnership concern, when you had them on the asset side, nobody was there to question you. Nobody was there to question you. But now, those 7 people are asking, what is the need for putting these items on the asset side? Am I owning this? No. Am I going to get this back money in future? No. So these are fictitious assets, fake assets, useless assets. So Schedule 3 said that if I record this on asset side, this will deceive those 7 people. It will cheat those 7 people because this is not an asset. I cannot generate any money out of it in the future, directly or indirectly. So Schedule 3 said that we will not show this on the asset side. Let's regroup it. What is this? These are the future losses. Do you agree with me? This 80,000, we will write off in a period of next 4 years. Total you had 1 lakh loss. In the first year, you wrote off 20,000. Do you agree with me? That is how this 20,000 loss came into the current year. Correct? No? So what is the balance here? You wrote off 20,000 here. So what is the balance to be written off? 80,000 at the end of the first year. In the second year, you will write off another 20,000. So what will be the balance now? 60,000. Third year, you will write off again 20,000. What is the balance going to be? 40,000. Fourth year, again write off 20,000. What is the balance going to be? 20,000. Fifth year, you'll write off next 20,000. The balance is 0. So this 20,000 of current year, and the future 80,000 is nothing but going to reduce my future profits. Hence, Schedule 3 suggested that we will not put this on asset side. We will regroup to liability side. When the plus item goes to the other side, it becomes minus, and you will minus it from the surplus. You'll minus it from the surplus. Means what? Opening balance of surplus will be there, no? With that, you will add current year ka surplus. Then one total will come. From that, you will minus this amount called as discount and issue of debenture, loss or issue of debenture, preliminary expenses, deferred revenue expenditure, advertisement suspense. It will come on the surplus. You will minus after these items. Yes.
Will you minus the whole 80,000?
100%. Now the question is that only. Will I minus the entire 80,000? The answer is 100% yes. Because the 20,000 of the first year is already getting subtracted in form of the current year profit and loss. The remaining 80,000 surplus, you'll minus it because anyways in the future year it is going to get minus. So it is not double time minus. Don't think it is double time minus. Next year what happens when you minus it? Please understand the game again continues the same thing. Opening balance of next year's profit and loss, and when you minus it is 60,000 separately you're minusing. Please understand this 60,000 rupees or 80,000 rupees is a separate ledger in the asset side. So you're just regrouping. Every year you have to regroup. So when I'm minusing 80,000 in the first year, 60,000 in second year, you're not minusing double time every year. No. This one ledger on the asset side, you're just regrouping it. So until the balance is there, you will take the balance on the other side and keep on minusing. And when I'm minusing, please understand, I'm not reducing the profit. I'm just trying to make the 7 users of the financial statement understand that these amount which is minusing, which will get realistically minus when in the future years. So much of profit don't estimate from the business or expect from the business is what the financial statement trying to say. Please wait. I'm coming one by one. I'll come. When I do the presentation, understand. Just give me some time. So now, when I prepare the balance sheet here, I will open something called as reserves and surplus. Under that, surplus. Under that, opening balance. How much is opening balance? Some amount, I don't know. Add current year profit or minus current year loss. So here we have in our example loss minus 20,000. So let's imagine the opening balance is 1,20,000 rupees. So what is my profit after the loss? Closing balance is 1 lakh rupees. Now there is one 80,000 ka loss is sitting on the asset side. What am I doing? I'm just trying to regroup it to the current year. So when I bring from the asset side 80,000 to liability side, this plus 80,000, when it comes to other side becomes minus 80,000. So minus discount or loss on issue of debenture 80,000. Balance is how much? 20,000. Now please understand, minusing these two versus minusing these two both are different. This is opening balance of the surplus account. If I minus is the net balance is 1 lakh, which is a balance of the surplus ledger. For example, if I open the surplus ledger, the balance brought down is how much? 1 lakh. Loss is how much? 20,000. So what is the closing balance? 80,000. The balance brought down 80,000 is coming on the credit side. So this is a closing balance which is credit in nature. So this is the balance of one ledger. Whereas this is the balance of another ledger. Both are two different ledgers. The impact is same like that of which we do in the fixed asset, no? Fixed asset 1 lakh minus provision for depreciation 20,000. How much does it become? 80,000 rupees. So this is a separate ledger balance. This is a separate ledger balance. Next year, what happens? Fixed asset 1 lakh minus PFD 30,000. Means next year's depreciation put together how much? 70,000. So you are minusing PFD every year. Does it mean that every year you are subtracting? Actually, no. Depreciation is how much? Actual difference is how much? 10,000. So actually difference is how much? 10,000. But when you have the habit of minusing this 20,000 and 30,000 because the original amount is what? Gross block. So from that every year accumulated depreciation we have to minus. So these are the two separate ledger. Same way, this is a separate ledger. This is the closing balance of surplus separate ledger. And this what you minus is a separate ledger. This is sitting on the liability side. This is sitting on the asset side. So from asset side, when I bring it to liability side, plus item became minus. So next year, what happens? Again, one more time. Next year, second year. Second year, opening balance how much? 1 lakh. What is the loss that you will transfer? Again, 20,000. Imagine there is no revenue, no other income, no any expenses. Only finance cost 20,000. So overall, my loss is again 20,000. So what is my balance, closing balance? 80,000 rupees. Now please tell me, in the discount ledger, what is the balance? You calculated here. In the discount ledger, the balance is 60,000. So this is a separate ledger. This is a separate ledger. So that 60,000 I am separately minusing. How much it is? 20,000. So if you remember which balance I took here, closing balance of surplus, I took it here. Are you able to follow? I never took the balance which came after minusing the discount. I took the gross amount. I didn't take the net of the discount value. Are you able to follow? So this is only to make the people understand that this 80,000 has got the potential of reducing a future profit. So you're trying to make people understand this information. Am I loud and clear?
Yes.
Online people, am I loud and clear?
Sir, one doubt.
1 second, Kana. I'll just show one information, then you can ask me a doubt. So now, when you come to your balance sheet, what have I done? In the balance sheet part, now listen to this very carefully. In your reserves and surplus, you have surplus here, okay? First is opening balance. Profit of current year, loss of current year, transfer to GR, dividend appropriation. Now below is what? Discount on issue of debenture, loss on issue of debenture, preliminary expenses, miscellaneous expenses. All these 2 items, I mean these 4 items. Preliminary expenses, miscellaneous expenses, discount and loss. Though the name has preliminary expenses, miscellaneous expenses, discount, loss. So all these looks like nominal account, but these are not nominal account. These are those parts which are yet to be written off. These are those parts which are yet to be written off. So here I have mentioned that word here. Preliminary expenses, comma, miscellaneous expenses, comma, discount or loss on issue of debenture, which is subtracted above, is that portion of preliminary expenses, miscellaneous expenses, discount or loss, which is yet to be written off. Correct, no? Preliminary expenses, miscellaneous expense, all these items, which is subtracted above, is that part which is yet to be written off. Correct, no? So here, from this 1 lakh rupees, I subtracted 80,000 rupees ka discount. What is this 80,000 discount? It is a balance of the discount ledger which is not yet written off, which will be written off in future. So technically this comes on asset side. So far in your partnership concern, sole proprietorship concern, you put those items where? On the asset side. But it does not make asset. So schedule 3 said that it is deceiving people, it is wrong, it is fake, fictitious asset. So take it to the liability side and minus it from the surplus, because this anyways it is going to get adjusted in future from the surplus. So this is an appropriation that we are doing. Please understand, this part is a separate transaction and this what you're doing is a separate one. This is some additional disclosure that you're giving. That's all. That's all. Am I loud and clear? Online people, am I loud and clear?
Sir,
Got some doubt online?
Yes, sir.
Sir, why can't we disclose deferred revenue expenditure and asset side, sir?
Why should you disclose deferred revenue expenditure on asset side? Please tell me, what is the meaning of asset? Asset means anything that you own or anything that you expect to receive in future, which has got some, advantage which can help you to earn the income in future directly or indirectly. And
Yes,
you
sir.
substantially own it. Deferred revenue expenditure, I gave you the example of Virat Kohli. I paid money 4 crores to Virat Kohli. It's yet to be written off.
Okay.
Is it necessary that from that I should confirmly derive the benefit? I may derive benefit, I may not derive benefit. So technically it is not an asset. Because of the accounting
sir.
rules and regulations, because of the concept of debit and credit rule, it has come there. But technically, is it an asset? Tomorrow, if I go and sell this in the market, will I get any return?
No, sir.
Land, if I sell it, I'll get return. Building, plant, machinery, I sell something, I'll get in return. Stock, I sell it, I get something in return. Cash, I have already in hand. Bank balance, I will get that money back if I go and withdraw the money. Investment, if I sell, I'll get something in return. So like that, can I go and sell deferred revenue expenditure in market? Will you buy it?
No, sir.
Manu?
No, sir.
If I sell loss on issue of debenture, will you buy it?
No, sir.
Discount?
No, sir.
Preliminary expense, will you buy it from me?
No, sir.
It is not an asset. Just because of the rules of debit and credit, it is appearing on the asset side, but technically it is not an asset. Hence, this is the treatment adopted in Schedule 3. Any problem?
Sir.
Online people, are you all comfortable with what I've discussed so far? So now, as per Schedule 3, if any preliminary expenses or miscellaneous expenses or discount or loss which is yet to be written off, which is having a debit balance item sitting on asset side, it cannot be shown now under asset anymore. Now, instead, it should be subtracted from your surplus. From which part of the surplus? From opening part, add all the surpluses, transfer to reserves, everything. Finally, you'll get in closing balance. No, from that closing balance only you have to further subtract. So we call this as below the line item of surplus. Any problem? Online people, any problem? So now do you understand? I have a statement of P&L here 20,000. Means what? P&L account is prepared. All expenses transferred to your P&L account. All the losses transferred to your P&L account. Despite that, you have a loss here. So if this loss is given along with the statement of P&L, is this the loss to be transferred to P&L, or this is the loss which is yet to be written off in the future? This is an item which is yet to be written off in the future. It's a future loss. So like loss on issue of debenture, you may have discount on issue of debenture. You may have miscellaneous expenses. You may have preliminary expenses. Below that, you have statement of P&L. So your mind should strike. Miscellaneous expenses given. Preliminary expenses given. Below that, statement of P&L also is given. If statement of P&L is given, which means what? Current year P&L is prepared. Means what? All the income is transferred. All the gain is transferred. All the expense and loss are transferred. Upon preliminary expense alone is not transferred. No, that also is transferred. But how much? A part of it. As per matching principle, a part of it is transferred. But remaining part is not transferred because of the matching principle. No, that is this discount, loss, and preliminary match miscellaneous expenses. Am I clear? So when you come across this loss on issue of debenture, discount on issue of debenture, preliminary expenses, miscellaneous expenses, along with the statement of P&L, then you should know that these four items are those items which are to be written off in the future. So these are having debit balance sitting on asset side. Sitting on asset side does not make sense. So what do? We regroup it on the liability side. So plus item, when it goes to other side, becomes minus. So from where will you minus it? Closing surplus. From the closing surplus, you have to minus it. Am I loud and clear? Online people, am I loud and clear? Online people, am I loud and clear?
Yes, sir.
Yes, sir.
Yes, sir.
Now, question 7. On 31st March 2001, Bose and Sen Limited provides to you the following ledger balance after preparing its profit and loss for the year ended 31st March 2001. So P&L account is prepared. So in my trial balance, what should be visible? Either the profit from the P&L or loss from the P&L should be visible. Equity share capital, fully paid shares of 10 each, 70 lakh. So how much is the number of shares? 7 lakh. 70,000 nahi ma. 70 lakh divided by 10 is 7 lakh shares. So this will go to where? Share capital. General reserve is 15 lakh, 49,100. Reserves and surplus. Loan from State Finance Corporation. We have to wait and see the information below. So can I go to the other information first? The following additional information is provided in respect of above balances. 4,20,000 fully paid equity shares were allotted as a consideration for land and building. It's a no cash consideration or non-consideration? Non-cash consideration. So I'll put a star mark here. So I have to give a disclosure. How many years disclosure?
1 year.
1 year disclosure. Okay. Cost of building is given. Cost of building is given, which is something else, and the building which is given in the trial balance is 20 lakh 50,000. In trial balance, 20 lakh 50,000. Outside trial balance, 28 lakh. So can I say this is gross block? Yes. This is net block. So what are we supposed to do? Take the difference as a disclosure item. So can I put a star mark here? Trade receivable for 3,80,000 are due for more than 6 months. Aging. So come to trade receivable. I'll put a star mark here. The amount of balances with bank includes 18,000 with the bank which is not scheduled. So non-scheduled bank. So we have to disclosure. We have to give a disclosure in the notes to accounts, and deposit of 5 lakh are the period for 9 months. So category 1, 2 or 3? Category 3. Very good. So now here we have these two. No, I'm putting a star mark here for both put together. Unsecured loan includes 2 lakh from the bank and 1 lakh from related parties. So for unsecured loan, they've given a breakup. So where is unsecured loan? Here. Loan unsecured. There's a breakup here. We have to see what it is. Entire amount of the preliminary expenses are to be written off by adjusting from the opening balance of GR. So there's some preliminary expenses given. Where it is given? Here it is. Now this is what I was discussing about. You have a preliminary expenses. The word is expenses. The moment you see expenses, what will you think? Oh, it should go to other expenses. But the question says what? The profit and loss account is already prepared. The profit and loss account is already prepared. And after that, they're giving this trial balance. So they had one trial balance. From that trial balance, they prepared the profit and loss account. And after that, they're giving you the further draft trial balance. Now, in that case, if they give you general expenses or preliminary expenses or any kind of expenses, does it mean that this expense they forgot to record in statement of P&L? No. By choice, they have not recorded. Why? Because in this one portion of the preliminary expenses, which is to be written off in the current year, is already been transferred to your other expenses. These are those preliminary expenses or miscellaneous expenses which will be written off in the future over a period of time. So these are having what balance? Debit balance. So technically they should go where? Asset side. Will I put those on asset side? No. I should minus from surplus. Generally from surplus. But in this question, what they're telling, don't minus it from surplus, minus it from the opening balance of GR. If the question had remained silent, had the question remained silent here, it was subtracted from surplus. If the question is giving any specific information, we should follow what the question is saying. So here we will minus this amount from the general reserve. So can I say this preliminary expenses is that expenses which is yet to be written off? When it will be written off? In future over a period of time. Current year preliminary expenses, is it been written off proportionately? Yes. So all the adjustments taken care of? Okay. You are not required to give the previous year figure. Thank you so much. You are required to prepare the balance sheet of the company as on 31st March 2001 as required under Schedule 3 of Companies Act 2013. Super. So I'm putting one star mark here. Are we good to classify now? Yes, so let's come back again. Loan from State Finance Corporation 1050 secured by hypothecation of plant and machinery repayable within 1 year, which is 2 lakh rupees. Chumma they're given, no? 2 lakh rupees. So 10 lakh 50,000 you'll record in the long-term borrowings. Yes. 1050, what will you do? Long-term borrowing? Short-term or long-term? Fatafat. Short-term. Long-term. Okay, one by one. Fatafat, here. Short-term. Full 1050 short-term.
2 lakh is short term, 850 is long term.
Full 10 lakh 50 if you say long term, you're wrong. Full 1050 if you say short term, you're wrong. They're telling that 10 lakh 50,000 is total borrowing. In that, there's 2 lakh worth of borrowing, which is secured by hypothecation of plant and machinery. It is due for payment within 1 year. Of which date? 1 year of balance sheet date. So this 2 lakh was initially, previous year it was long-term borrowing. But now we are going to pay this in the current year, we are going to pay this within 1 year of balance sheet date. In the previous year, it was long-term borrowing. In current year, what are we supposed to do is the question mark. When are we going to pay? We are going to pay within 12 months of balance sheet date. So which means we are going to pay the money on or before the benchmark date. So this 2 lakh rupees now you will reclassify from long-term borrowing to short-term borrowing. Where under short-term borrowing? Current maturities of long-term debt. Is this clear or not clear? Guys, previous year, 10 lakh 50,000 was long-term borrowing. I came in current year. In the current year, now the question is this 10 lakh 50,000, how should I classify? They are telling that out of this 1050, 2 lakh is there. No, is due for payment within 1 year. So 1 year from balance sheet date means if I calculate, this is the due date of payment. And this itself is benchmark date. So if the payment is happening on or before the benchmark date, then that 2 lakh becomes your short-term borrowing. So from long-term borrowing, 2 lakhs rupees have to classify to short-term borrowing under current maturities of long-term debt. We discussed the example in the last class. So every kuti small example what I gave is of no waste. I mean, I gave it for absolute relevance. So before we discuss any concept which is very big, have the habit of breaking down in the small parts. The reason being, when you discuss a complicated concept in a big question, first the question is big. To digest the information of the question is very difficult. On top of that, if I infuse with that tough concept, you'll not be able to get the flow. So what I did here, listen, I'm the hero here. So what I did is wherever I feel the concept is complicated, I'll give a small portion of it, extract of it as a separate question. So what happens? Your focus will be on that particular situation alone. You'll not be confused with multiple situation of other questions. So do you think I'm a good teacher? No energy, no enthusiasm. Albin is not agreeing. Voice earlier, va?
Yes, sir.
Okay.
Sir,
Now,
sir, how will we know this loan was earlier a long term? Now it is classified to short term, sir.
loan from State Finance Corporation கொடுத்திருக்கான். It is to be paid. How much they're telling? 2 lakh of this only is going to be paid in next 1 year. Now the question what has been asked is, Kritin is asking, how do you know last year this was long term borrowing? Question says that out of this 2 lakh is to be paid in next 1 year. The question is silent about what will happen to the remaining amount, whether we will pay or not pay. There's no information about the payment, which means that remaining amount I'm not going to pay next 1 year. The remaining amount I didn't pay in current year, I am not going to pay next year. So obviously, in the previous year, this would have been long-term borrowing, no? Because here, if you take previous year, the benchmark date was this. You didn't pay it here, nor you had intention to pay here. If at all you have the intention to pay here, it is beyond the benchmark date of the previous year. So hence, it is understood that the previous year amount is long-term borrowing.
I couldn't have borrowed this in the current year.
If it is borrowed in current year, chalo, see, no, you cannot say this is borrowed in the current year. How do you say this is borrowed? Okay, you can tell. Why can't you tell? See, one more assumption is that he's telling that what if this money is taken in current year? Current year only it is taken. In that case, what happens? In that 2 lakh, I'm going to pay within next 1 year. So it goes to short-term borrowing. And remaining will be still long-term borrowing because I'm not going to pay. Either ways you take the assumption, still we are having the same answer. So 1050 minus 2 lakh is how much? 850. So 2 lakh will go to your short-term borrowing under current maturities of long-term debt, and remaining 8 lakh 50,000 will go to your long-term borrowing. What other kind of liabilities? Long-term borrowing. Donkey fellow. Now next, loan unsecured. There's a star mark. 8 lakh 47,000. Okay. What are they telling? Let's see. They're telling that unsecured loan includes 2 lakh from a bank and 1 lakh from related party. 2 lakh from a bank and 1 lakh from related party. 2 lakh from bank, 1 lakh from related party, and remaining is how much? 5 lakh 47,000, which is others. They're not disclosed. And they're telling all of these are long term. Now, what will your mind do? Sir said related party means only short term. That is when the question is silent. Question is loudly screaming and telling long term, long term, long term. Now, how will your brain say this is short term, short term, short term? So all the three will be where? Long term, long term, long term. Am I clear? Related parties loan will be short term only when the question is having no information about the length of the loan. Here they have told very specifically it is long term, unsecured. So this 8 lakh 47,000, the breakup they have given. This breakup, who gives you in the real life? Accountant. You have to ask accountant. Accountant, 847 is there in your trial balance. Unsecured loan. Can you give a breakup of this? Is this loan from one person or multiple person? He's saying, no. This 2 lakh is coming from bank, 1 lakh from related party, and 5 lakh 47 from others. So all this information is given by your accountant, the client for which you're working. No. You're going to sign for your client. The client's accountant or a chart accountant is going to give you this information, which is given in the additional information. Now, sundry creditors for goods and expenses, 14 lakh payable within 6 months. Trade payables with the aging you have to give. Profit and loss account is given. Surplus in the reserves and surplus. Provision for tax, short-term provision. Calls in arrear, subtract from share capital. Land, property, plant, equipment. Wonderful. Building, property, plant, equipment. Machinery, PPE. Inventory, current asset, inventories. Trade receivable only. Advance, short term loans and advances. Cash and cash equivalent. Preliminary expenses minus from GR. This not surplus. Here they said GR specifically. Patent and trademark, intangible assets. Under PPE, we have PPE 3. Main heading is what? PPE and intangible assets. Under that PPE, intangible asset, capital work in progress, intangible under development. So I'm telling point number 1 and 2. Can we start? Heading of the company, please. Boss. Boss. Okay. Please write heading Bose and Sen Limited. तू कर दे Bose and Sen Limited heading, then balance sheet as at 31st March 2001. Which color looks better, yellow or green?
Yellow.
Yellow, dirty yellow. Green is looking better?
Yes.
Sorry, okay. Poch ma, ellame poch, green marriage. Cheating this is. Okay, now heading particulars. Note number, figures at the end of current reporting period. You can write the date also. 31st March 2001. Under that first item is equity and liabilities. Sir, you're not writing on the whiteboard, sir. I have the privilege of coloring here. Equity and liability. I also should do along with you. I'll also write.
Yes, sir.
You can't see somebody happy, enjoying, Sir, we are suffering means you also suffer, sir. Okay. Under that, the first one is shareholders funds. Under that, we have share capital. Online people, are you all there? Second is
Yes, sir.
reserve and surplus. Note number 1. This is note 2. Share warrant, you can skip it. Share application pending allotment, you can skip it. Second is non-current liabilities. Under that, first one is long-term borrowings. Note 3. B is deferred tax liability net. It's not there, leave it. Next is other non-current liabilities. Do you have anything other non-current liabilities? Other non-current liabilities. Think. Sorry, other long-term liabilities. Other long-term liabilities is there? Not there. Fourth one is long-term provision. Long-term provision there? Not there. Third item. Current liabilities. Under the first item is
Short-term borrowings.
trade paper or short-term borrowing?
Short-term borrowings.
Short-term borrowings. This is what happens when you don't practice the format properly. Short-term borrowings breakup is there? Yes. Note number 4. Then B is trade payables. Aging has to be given. So note number 5. C.
Other current liabilities.
Other current liabilities. Is it there? Anything of other current liabilities? Other current is not there, no? Okay. Then we can do short-term provision. Short-term provision. That's all?
Yes, sir.
Note number 6. Online people, that's all, no? Note 1 to 6 so far?
Yes, sir.
Okay, now let's go to share capital. There's no information about the authorized, so they left it blank. So write note 1 share capital. Under that, issued, subscribed, and called up capital.
Sir, but we considered 70 lakh.
We can do that, nothing wrong. You can leave it blank also. What they done in the previous question? Answer. Check, no? Illustration 5, what they did?
But they say you can leave that, sir.
They've written authorized.
No, sir, no other.
So whenever in the absence of information authorization, you can leave that blank, or you can just write authorized, like we did in 12th, no? Authorized capital. You can just write and leave it. There's no information, you can leave it. Then issued,
Paid up.
right? Issued, paid up, issued, subscribed, issued, subscribed, and paid up capital. So how many shares? 7 lakh shares. 7 lakh equity shares of rupees 10 each. How much? 7 lakh. And all are paid up. The question says that all are paid up or pending. Pending is there. How much? 7,000 minus calls in arrear. How much is calls in arrear? 7,000. So how much is balance?
Amount is
10 missing.
70 lakh. Okay, 70 lakh and 7,000 is calls in arrear. Is it?
Yes, sir.
69 lakh.
93,000.
69 lakh 93,000. You have to give a disclosure here. Out of the above. Out of the above. Where is it? 4 lakh 20,000 fully paid equity share. Means what? 4 lakh 20,000 divided by 10. How much it is? 42,000 equity shares are issued for consideration for land and building. Out of the above, 4 a. Oh, sorry. 4 lakh 20,000 is fully paid equity shares. It's not. Sorry. So 4 lakh 20,000 is equity shares. It's a quantum. So you can take full amount. Out of the above, 4 lakh 20,000 equity shares are issued for consideration other than cash. You can mention what is the consideration also in the bracket. For consideration other than cash. In bracket for land, whatever it is. So 69 lakh 93,000 is the amount. Okay. Next is note 2. Reserve and surplus. In that, how many types of reserves we have? 2, no? One GR and another surplus, is it? Okay. GR is how much? 15 lakh 49,100. Please add in the inner column. 15 lakh 49 100. 15 lakh 49 100. You have to minus preliminary expenses. 93 100. How much? 14 lakh 56,000. Then surplus. Write the outer column directly, which is 7 lakh rupees. Total how much? 21 lakh 56,000. $21 lakh 56,000. Sorry? Done? Third note is for long-term borrowing. Long-term borrowing. In that we have loan from State Finance Corporation. In the inner column, please write loan from State Finance Corporation. In the inner column, 10 lakh 50,000 less there's current maturities of long-term debt 2 lakh rupees. Sir, should we minus and show this in inner column? 100% yes. Because we want to know how did you derive at that 8,50,000 rupees. Yes, current maturities of long-term debt, which is a part of your short-term borrowing, minus 2 lakhs. Balance is 8,50,000 rupees. And then we have unsecured loans. So this is point number 1. Point number 2, unsecured loans. In that we have A, B, C, 3 category. A, B, C. A is bank, B is related parties, C is others. So write in the inner column 2 lakh, 1 lakh is related parties, and 5 lakh 47,000 rupees. Total how much? 8,47,000. You can write 847 here itself. 8,47,000 ka breakup we have given. 16 lakh 97,000. Any problem? Don't by heart the question, answer, understand the concept, feel it, because this is concept based examination. Anyhow the question could be twisted. If you don't apply your mind, it's screwed. Next is what? Short-term borrowings. This is 16 lakh 97,000. Let me write it here. 16 lakh 97,000. Short-term borrowings. Note 4. Short-term borrowings. Only we have one item, which is yes, current maturities of long-term debt. In bracket, please write State Finance Corporation. 2 lakh rupees. Any other short-term borrowing? No. So 2 lakh rupees short-term borrowing. Trade payable, note number 5. Note 5, trade payable. Sundry creditors due payable within 6 months. Matlab 0 to 6 months. So actually then in that case aging is not required because payable within 6 months of the due date. No, it is payable within 6 months. No.
It is not due yet,
There is
sir.
no aging.
Not due yet.
See, payable within 6 months. They didn't say that from the due date 6 months is gone by. Please understand the difference. When I say aging means what? Due date is come. On the due date, did not pay the money, and you delayed from that 6 months. Here they're telling payable within 6 months. So these are those payables for which the due date is not yet come. It will come only in 6 months. So for this, aging is not required. Directly you can write note number. Sorry, directly you can record this amount. How much it is? 14 lakh in the yes. Note 5 will not come in this case.
Not even that payable.
Not required. If you want, you can write it. Nothing wrong. In exam, see, in real life, you will show it. In real life, you will give notes for everything. But in exam, you have to see where you have to cut short because you have to save time and complete the question within the given time frame. So how much it is? 14 lakh rupees. What have they done in textbook? Any notes have they given? They have not given. It's a share capital reserves and surplus, long-term borrowing, short-term provision. Nothing for trade payable. So let's say short-term provision ka it is 5. Note 5. Short-term provision for tax. How much it is? 8,69,900. 8,16,900. Total, please.
1 crore.
See, you can leave the note. You don't have to write the note for this. But in majority of the question, what they've done is they've given a separate disclosure. So you can give a separate disclosure. But I'm telling you in exam, if you don't find time, let's say you're taking this as the last question. In that case, you can write short-term provision directly. If it is only provision for tax, you can mention provision for tax here in bracket. If you have time, give a disclosure separately. So depending on the case, you can decide.
1 crore 18 lakh 62,000.
1 crore 18 lakh. என்னப்பா இப்படி சொல்றீங்க கால்குலேட்டர் வச்சு 1 crore 32 lakhs 1 crore 32 lakh 60 1 crore 32 lakh 62,900. Okay, see, the logic is very simple. You took all the liabilities here. From this, you subtracted preliminary expense. How much? That is what you did. No, you've taken only one item here and subtracted in the liability side. 93,100.
Did they reduce present like marks for it?
So one second, sorry, you subtract one more item also. Call scenario. 2 items you subtracted from the debit balance. Yes, sorry, you're asking something.
Short-term provisions நம்ம direct notes எழுதாம direct அப்படியே எழுதலாமா presentation
The question what is being asked is, sir, in exam for short-term provision, if I don't give a note number separately, if I don't disclose separately, will they deduct marks? Maybe, maybe not. But my point is, when you, in exam you don't have time. That time, because of giving the disclosure, if you don't end up completing the balance sheet, anyways you lose the mark. So instead of taking that risk, taking a risk of writing directly makes sense, because sometime the examiner might say that it's okay, it's written the value, it's okay. So I feel that for this they may not deduct the marks for provision. When the presentation part of short-term provision alone, I feel they will not deduct the marks. But if you don't complete the question because of this disclosure, then that will be a disaster. So it will be very practical in the examination hall. So we have time, do the disclosure of the short-term provision. Otherwise, if you don't have sufficient time, you can probably, what you can do is you can write the amount directly. At the end, when you complete the question, if you have last 30 seconds left, that time you can do disclosure and come. Yes. Current maturities of long-term debt, in bracket you can write, it's coming from State Finance Corporation. Okay, now next is what? Asset part. 2 assets. In that, the first item is non-current assets. Under that we have PPE and intangible assets. Under that one we have PPE, second we have intangible assets. So note number 6 for PPE, Intangible asset, only one item is there. Directly also you can write it. Let's do note number 6. PPE. Particulars. Gross block. Accumulated depreciation. Net block. What are the assets? Land. All these which is given in the trial balance is net or gross? Only people, all those items which is given in the trial balance, debit balance column, is it gross block or net block?
Net block.
Net block. So land 14 lakh in the outer column, net block 14 lakh. Then building 20 lakh 50,000. Plant and machinery 36 lakh 75,000. If you don't have time in exam, in rare scenario, write P and M income. Only in the scenario where you cannot complete the paper on time. Furniture and fixtures 3 lakh 50,000. Next, cost is given. Cost of the building is 28 lakh. For land, it is going to be same 14 lakh. For building it is 28 lakh. So what is the depreciation? 7 lakh 50,000 is the depreciation. Balancing figure. Then it is 49 lakh for plant and machinery. 49 lakh. And for furniture fixture it is 4 lakh 37,500. 12 lakh 25,000. And for furniture fixtures? 87,500. So what is the total of the net block? 74 lakh 75,000. 74 lakh 75,000. $74 lakh 75,000. Patent and trademark 4 lakh, directly you can write it. Patent and trademark. If you want to give a breakup also, you can give a breakup, nothing wrong. 4 lakh rupees. If you want to present this in notes, nobody will stop. Guys, you can give extra notes, nobody will stop you. You should not reduce, what is below the minimum requirement. Next, do we have any non-current investment? No. After non-current investment, deferred tax asset net, not there. Next, long-term loans and advances is there? Not there. Other non-current assets? Not there. That's all?
Yes, sir.
Okay. Next is what? Current assets. In that, what is the first one? Current investment. Do we have current investments? Do we have current investments? No. Next. Order. Inventories. Inventories is the next item. A, inventories. Note number 7. What is the break of inventories? Finished goods and raw material. Finished goods 14 lakh. Raw material 3 lakh 50,000. Total is how much? 17 lakh 50,000. Next is trade receivable. Trade receivable. Trade receivable, they have given a aging. 3,80,000 are due for more than 6 months. Means due date has come. The customer did not pay the money. And how long did not pay the money? For 6 months. So note 8. Trade receivables. How do you write it? Debt due for more than 6 months. Debt due for more than 6 months. How much it is? 3,80,000. Others, how much? That is from 14 lakh. If I minus 3,80,000, how much is the balance? 10,20,000. So total is 14 lakhs. Then short-term loans advance, cash and cash and cash equivalents. Cash and cash equivalents. Note number 9. Then what is the first item? Cash in hand. How much is cash in hand? 2,10,000. Then B, cash at bank. Scheduled bank, non-scheduled bank. So balance with bank is 17,29,000. Okay. Now what are they saying? How much is the 17,29,000? In that, 18,000 is with the bank who is not scheduled. So non-scheduled bank, 18,000. 5 lakh for a period that is there in deposit. So 5 lakh is there in deposit, which is maturing, which is there for 9 months. That is 3 months to 9 months. Category 3. How much is this? Deposits 5 lakh. So balance is there in your current account. How much it is? 17,29,000 minus 5,18,000. 12,11,000 is there in the scheduled bank. So 12,11,000. 18,000 non-scheduled bank. In category C, deposit more than 3 months up to 12 months. How much? 5 lakhs. Total, please.
19 lakh 39,000.
19 lakh 39,000. Online people, are you all with me?
Yes, sir.
Yes, sir.
D is what? Short term loans and advances. Now, short term loans advances, only one item is there. Sorry? You want to see note number? Okay, one second. Note 9, cash and cash equivalent. Please see it. First one is cash in hand, 2,10,000. B, cash at bank. Scheduled bank 211, non-scheduled bank 18,000. So both are current account balances. Both are current account balances. No, 5 lakh will come separately. Depreciation more than 3 months up to 12 months. So if you look at the format, what I gave here. See, first is cash in hand, this part. Then balance with bank in current account, one amount, scheduled, unscheduled. In deposit, up to 3 months. That is 0 to 3 months. Other bank balances, deposit more than 3 months, but less than 12 months. Clear this point? Short-term loans advances? Yes. Directly you can write it, no need to give the breakup. 2,98,900. 2,98,900. Because to give disclosure, I don't have any other information. To whom am I given this advance to? I don't have any information. So you can leave it directly. So what is the total now? 1 crore 32 lakh 62 900. 1 crore 32 lakh 62 900. Correct? Okay. Easy.
Note number 9 once again.
Note 9. Deposit more than 3 months up to 12 months. Subiksha is like, sir, I'll take my statement back, sir. This is deposit. More than 3 months up to 12 months. It is neat. Something is wrong with your eyes.
No, sir, that thing I saw other bank deposits and ICAI.
Adama, so what I'm telling, no, in real life, you'll give so much of information. But in exam hall, you have so much of information. What are we doing? We are giving this as one part. We are giving this as one part. Subiksha, listen here. And we are giving this as another part. So 3 part. See, checks in hand, draft is not there. No. This is not there. So A is cash in hand. B is balance with bank. C is other bank balance. So other bank balance like that, if you keep on giving the breakup, then when will you complete the paper on time? So notes I'm telling you, you have a leverage to cut short here and there, few places. It's not 20 mark question. It should be, your maximum is 14-15 marks.
It's not 20 marks.
I'll tell. When I discuss the PP, there is a PEP. After this chapter gets over, I told you I'll give you one summary. Since 2018 till now, from this chapter, how many times the question has come for how many marks? I'll give you a chart. With that, you'll understand. Hey, what is the problem with note number 9? How many times?
You showed one thing and then you started explaining something else.
Ah, okay, sorry. Do it. Fast. No, she's got a point, no. It's all because of Subiksha. No, she was asking, so I went to Excel sheet to explain.
More than 3 months.
More than 3 months.
Sir, was there another category where more than 3 months, less than 9 months, then more than 9 months, less than 9 months?
That is for, you're talking about trade, payable and receivable, like that we had so much breakup. For FD, only 2 breakup. For deposit, only 0 to 3 months is one part. 3 to 12 months is one part, that's all. 9 months is coming between the range of 3 to 12 months, no? Balance sheet, okay. It's the total asset part. That's all. Technically speaking, we are done with the 70% of chapter. 70 to 80% is done. So remaining 20% is what? We have, the same type of question with here and there different twisted adjustments. But broadly, you know how to prepare the statement of P&L, how to prepare the balance sheet. So 80% technically we are done. 20% is different format. There's one concept that is yet to be discussed, which is related to dividend. It's a company law thing that we have to discuss. So we'll be discussing at the end. Am I clear? So now, today is the last class before the result. So tomorrow we have result, so no class. So definitely we don't have class for next 3 days. So tomorrow is what? Tuesday, Wednesday, Thursday. So next 3 days we'll not have any class. At least for next 2 days we'll not have. Tuesday, Wednesday confirm we'll not have. Thursday depends on your mood, my mood, everybody's mood. So Tuesday, Wednesday confirm no class. Thursday, Friday onwards we'll plan. I'll inform you prior hand. And Wednesday I'll give you a target. Wednesday I'll tell you which questions you should work out as homework and come. I'll give you only those type of questions which is the concept that we've already done. In case I don't find any such questions, then I'll not give as homework. So first I have to go and see which questions is like, which you can do it. So I'll look into it and give it probably by Wednesday morning or end of the day. Done?
Yes, sir.
Online people done?
Yes, sir.
Fantastic. So let's wrap up, people. That's all from my side for this session. I'll see you all in the next class. Until then, bye-bye. See you. Take care. Thank you,
sir.
people. Thank you, people. Thank you.